Welcome back. We hope that you are relaxed and refreshed after our short break and ready for our next session. As I'm sure most of you know by now, but for anyone who wasn't able to make our other sessions and might be joining us for the first time, I'm Jenny Winkworth. I'm the program manager for ACT. And I am particularly excited for this session because for me, until very recently, blockchain was really just a concept that involved Bitcoin. I was very unfamiliar with the ways that blockchain can and is being used in the insurance industry. So since then, I've had the opportunity to sit in on several conference calls and some educational sessions that RiskStream has held this year. And I have really been personally intrigued really to see the real world application of blockchain in the insurance industry. So I hope that everyone else finds the session enlightening for that reason. So I want to just remind everyone that all the attendees are muted, but we do welcome your questions. So please feel free to use the Q&A button at the bottom of your screen to submit your questions. We've set aside some time at the end of our panel discussion to answer those questions. So stick around at the end. Our panelists are going to be happy to answer any questions that you've input during the session or anything that you'd like to ask during the actual Q&A portion. So let me introduce Ron Berg, ex-executive director, who's going to be moderating this session.
Thanks, Jenny. So this next session is going to provide some insights, as Jenny said, into an area we've heard about and talked about for some time. But right now, we feel is a perfect time to discuss these insights on newer functions that blockchain is now providing in our industry. But before we do that, let's meet our panelists. We'll first start with Andrew Loomis, the underwriting innovation manager with Liberty Mutual. Thanks for being with us, Andrew. Could you share a little bit about your current role and something about your background as well?
Sure. Thank you so much for allowing me to take part in this. So I'm Andrew Loomis. I'm the manager of underwriting innovation at Liberty Mutual in one of our groups, GRS. And what I focus on is looking at emerging technology and how we can use it within our underwriting process. Also exploring the same emerging technology in regards to knowing that our clients themselves will be using it. So how do we have a better understanding of that for us to underwrite? I also look at a variety of different industries, including construction, mobility, digital assets overall. So there's a lot of overlap here with what we'll be discussing today, with what I tend to do on a daily basis. My background, I'm an underwriter by trade. So I was an underwriter for about 13 years, both in the field as well as product line. And I've always been involved in the innovation space with insurance, and the ability to take those two aspects that I love about insurance and combine them into one role is a great opportunity. So very happy to be here. Looking forward to the discussion.
Thanks, Andrew. So our other panelist is Brendan Pica, head of outreach at the Institute's RiskStream Collaborative. Brendan, would you please take a minute to share a little bit about your role and also a little bit about your background as well?
Sure, thanks, Ron. So I'm the head of outreach for RiskStream, previously the head of product for RiskStream. So anything that has to do with membership, talking to potential or prospective members, talking to partners or strategic alliance matters, even marketing and some design. We're a small organization, so that we wear a lot of hats. Prior to RiskStream, I actually worked at Liberty Mutual. I was in innovation as well on the personal lines claim side. Worked on a number of different projects there. I think the two most important ones were the drone program for post-catastrophe response on personal lines homeowners, and also blockchain, which is kind of how I got connected with RiskStream. Prior to Liberty, I worked at Anheuser-Busch InBev in the beer industry, but also in an innovation function. So there's been a thread of innovation throughout a lot of what I've done. And very happy to be here today with you, Ron. Thank you.
Well, thank you both. So I love the synchronicity in your backgrounds and the width and depth as well. So let's dive right into the blockchain topic that we focused on today. As I'd said, and as Ginny said, blockchain is not a brand new concept, though I think many attending this session may not have a deep background and may not be aware of some of the specific initiatives that are emerging. So we're going to kind of cover that landscape. So that said, for those that aren't familiar, let's begin with an overview of what blockchain is and also isn't. So Brendan, we'll start with you, please.
Sure. Blockchain is essentially a decentralized or distributed immutable digital ledger. So you have these blocks which are cryptographically secure and signed, and they're all connected to one another. So each transaction is based off the previous transaction. And if you ever wanted to edit a transaction, you'd have to edit every subsequent transaction. So in that way, it's immutable. And that really came to be with blockchain. And so the main kind of raison d'etre of blockchain was for value transfer of Bitcoin. And then it evolved into decentralized applications with Ethereum. So not only do these blocks contain transactions, they also contain little snippets of code. So think about a computer or an operating system not existing on one computer, but existing on millions of computers, and the potential for that. It continues to evolve today. We see also directed acyclic graphs with things like IOTA, or Hedera hash graph is another example. And there's also decentralized finance, right, which is coming about now too. So we see a lot of chain interoperability protocols and DeFi protocols that are happening. I think what's important for the insurance industry to understand is that it's really valuable for when there's multiple parties that need to share data, and they don't necessarily need to trust one another. So they all have an alignment based upon what the data is, without having to, work side by side or share data silos. What it's not a cure-all for world hunger, right? It's a lot of people think it's going to decentralize intermediaries, or it's going to get rid of the banking system. It's not going to do any of those things. It's going to be supplemental, and it's really going to be interesting as this evolves to see where it's going to go, particularly for the insurance industry.
Yeah, we've heard a lot of discussion on, especially at the beginning of Bitcoin and blockchain, about it kind of replacing a lot, and we're not seeing that. Andrew, from your side, similar? Do you have a kind of a different lens, or would you share with us, please?
Yeah, so I it's generally similar. What I would really recommend everyone do, maybe not immediately after this call is over, but maybe give it a day, is to read the Bitcoin white paper. To go online, you can easily Google it, Bitcoin white paper. It's maybe a 15 to 20 minute read. And what it does is it really sets out that ecosystem that Brendan mentions, is that how could you set up a system that can transfer information, transfer value, but is completely trustless. And the thought of a trustless system sounds a little scary, but when you actually kind of unpack it a little bit, it means that these ecosystems can act and you don't have to trust that other person on the other side because everything is transparent. So when we think about something like that, it seems scary, but at the same time, because it's essentially embracing transparency, you have many eyes on something, be it a data sharing agreement between multiple parties, be it value transfer among a few parties. So when you have this system, this distributed ledger that everyone can see, it creates a single source of truth. And that's something that I think is extremely important. And when we think about how that impacts independent agents and brokers, these are things where there may be more and more technology and more solutions that are based on this type of system. So it's important to have an understanding of that and realize that you don't have to approach this in a scary way. And it's not all just cryptocurrencies. It truly is. There's this technology that allows a very transparent playing field, a very relatively even playing field that everyone can potentially benefit from.
So Andrew, you and Brendan have been involved with blockchain, for some time now. And I'm sure you get questions, input, and I'm sure our attendees listening to this are wondering about some specifics. What do you think the biggest misconceptions on blockchain have been that you've each received from your perspectives? Andrew, as long as we're with you in the last question, let's keep it with you on this one.
Sure. So I think a lot of people just associate blockchain with cryptocurrencies and digital assets. And with that, there's a bit of a stigma around that. We look at it as we don't want people to just think of that, and with that, they tend to think about the questionable things that they've heard surrounding cryptocurrencies. Be it, is it used to do things that are a little bit shady? Is it doing things to avoid authorities? And those are things that when you actually break down some of those actual use cases, so one, you'd be surprised that blockchain is not as, cryptocurrencies rather are not as shady as people think they are, because they're so transparent. So that's a huge misconception, that we want people to show that with this transparency, you can actually do less shady things, because because everything is really out there in the open. The other thought here is that I really want people, if there's one thing to kind of take away from a session like this, I want people to be able to disassociate blockchain and distributed ledger technology from cryptocurrencies and digital assets. Yes, blockchain tech is really what enables digital assets to exist in the first place, but it can do so much more. So that's a big misconception that I'd want people to understand, that when you hear about blockchain and you hear about distributed ledger, you don't necessarily have to jump straight to that concept of the cryptocurrency and the potential problems and areas that is perceived to have. It truly is, let's break it down. Let's look into these different areas that we all can benefit from this, and look at the different insurance applications that do exist.
So Andrew, as long as we're in the neighborhood of that, I heard you kind of refer to kind of a sense that is around cryptocurrency from being shady or a little negative. Do you think that's primarily from the involvement of ransomware and needing cryptocurrency to pay for ransomware and hostage data? Do you think that that's an aspect of it in the perception?
I do, because you hear about it. And it's one of these things where criminals that engage in this type of activity, they'll look to get their value no matter how they can. But if there's two quick things I want to highlight, one, criminals will try to do a lot of different things to get into your system. When you see how criminals try to hack into these different areas and have this ransom based on cryptocurrency, right, they tend to be used the same ways that they're doing it if it's not cryptocurrency. They're using social engineering. They're not necessarily hacking into a system. The other aspect that I want to highlight is that because this system was so transparent, and the FBI was able to track where that ransom was being passed to through wallet to wallet to wallet, to a point where they then saw it hit an exchange to try to actually get fiat currency, and that's when they were able to stop it. So it's one of these things where if that were cash and you transferred cash to someone, it's gone. It's gone. But because it was on this distributed ledger, they could actually effectively track where that was going. So I think it's a great topic to bring up. Once again, it's a misconception that cryptocurrency is not an enabler of cyber ransomware. It's just a potential currency that someone could use to do the exact same thing.
So yeah, I said that we weren't going to spend a lot of time on cryptocurrency, but I think that depth was warranted to talk through. Brendan, from your side, similar misconceptions that you're seeing, something different?
Yeah, no, it's all very similar. Blockchain is only for criminals, cryptocurrency is only for criminals, right? And the ransomware, criminals, to Andrew's point, is they're going to find any way they can in order to achieve their goal. And cryptocurrency as well as fiat is just means to an end. It's also, I should note that blockchain, a lot of people think that blockchain is public, and in some cases it is, but also in some cases it's private, much like RiskStream. RiskStream's network is a private network. So all the players who are on that network are known, and they're trusted, and they're verified. Blockchain also is, as I said before, not going to be a financial system bank killer, right? It's not going to disintermediate the banks. We still need the banks, and we're always going to need the banks. There's also not one global blockchain. A lot of people think there's just this one blockchain that's just out there in the wild, and there's thousands of them. A lot of people also think that blockchain is a means of file storage. kind of a new type of file storage, and
Right.
that's both yes and no. So there are some protocols out there like Filecoin or Storage that is working to use blockchain and decentralized services, like think of Dropbox or Box, Google Drive, OneDrive. These are all centralized storage services, but there are some entities out there that are working on decentralizing that, which is pretty interesting. And then lastly, a lot of people think that blockchain is going to, eliminate the intermediaries, which it's just not going to do. I think if anything, it's going to maybe reduce your reliance on some of these intermediaries, but it's not going to eliminate them. And oftentimes we've seen that, solutions that are looking to or have the potential to disintermediate actually needs that kind of, middle person there in order to supplement the data flow or the information that's needed in order to complete a transaction. So there's a lot of misconceptions out there. The insurance industry is a risk-averse industry, so a lot of these things pop up quite often.
Yes.
To kind of throw a wrench in the wheels that are in motion towards a potential solution. So you just have to kind of take those, address them, and put them on the side and keep going with what it is you're working on. But they come up a lot.
I think those things are important to call out so we can set them aside and really focus. And so having said that, let's take it down a level and get a little bit more detailed. Could you share, both of you, kind of the areas you're working on and what that you see emerging for real impact by blockchain in our IA distribution or life, annuity, personal lines, commercial lines? Brendan, we'll stick with you on this first.
Sure, yeah, that's great. You don't happen to have that slide, do you? That has
I do. Hang on. 3, 2, 1.
So this is just a look at our ecosystem here. It's not an idea of what it is we're working on, but who we're working with. And we have over 30 PNC members to date, and that number continues to grow. You can see number 2, these are our LNA members. It's a smaller bubble. We started the LNA side a little bit later than the PNC side, but we have some really cool use cases there, namely mortality monitoring, which is one of our flagship use cases. Number 3, these are other nonprofits, associations, consortia in academia. You can see the big I down there on the bottom. There, the ecosystem around the insurance industry is vast, and we try and get everybody who's at the table to discuss the potential solution and how it could evolve and how it can be articulated. And we need to get everybody's perspective in that room. So there's a lot of folks here that we work with. Number 4, these are regulators, Department of Insurance, and government agencies. We want to be talking with these folks, and our members and stakeholders want to be talking with these folks to let them know what it is we're working on, so there's no surprises. But we also want to solve some of their pain points as well, particularly with state reporting. The different states need their data at different intervals and in different ways. And so that's an administrative pain point for some of our members and stakeholders, but also for the state agencies. So we're trying to solve some problems there for them as well. Collaborators, non-insurance entities that work with the insurance industry. Think of banks or energy companies that you work with on a regular basis. I know in personal lines, it was always a task to try and get the total lien holder payoff amount in a total loss event for a car, and you would have to call, the banks to try and get that number. And it was always a 10-15 minute process in order to extract that number from the customer service representative. So we're looking for ways to make the collaborators, the interactions for the insurance industry with the collaborators more seamless. And then lastly, providers. These are folks that we've worked with to build, connect, or enable the solutions. I think most important here, there's a couple important folks here, but Kaleido is the partner that we're working with on the platform and use case design. They came in for the mortality monitor proof of concept, and they were able to build that in just 3 weeks. So we've actually moved everything we've done in the past over to Kaleido's platform. And then lastly, I'll just say that we're working with Guidewire and Castle Bay. They're a Guidewire developer on the first notice of loss data sharing solution. So we're building an adapter that sits in the Guidewire marketplace that any member or stakeholder can download and then connect their Guidewire claim system to the Canopy network in order to start sharing data with other carriers when there's an auto loss event. So we're really excited about that as well. If you go to the next slide, Ron, here I'll just give you a quick look what we're working on. The top half of the slide talks about our labs process, and I won't go into that too much. If you'd like to learn more about that, please feel free to reach out to me after the session. But if you look at the bottom half, you'll see that we have these phase 1 explorers, and we're looking at life and annuities, or licensing an appointment for life and annuities and property casualty. bordereau reporting and reinsurance, proof of insurance verification for personal lines. Down below, we have some educational series that we conduct on behalf of our stakeholders and members, NFT educational series that we just held, which was really popular. There's also some use cases that are on hold, which meant we explored these in the past, but there wasn't enough momentum to get them to the next stage. However, there's still conversations being had about those. So those are currently on the back burner. Phase 2, these are proof of concepts. Commercial lines surety bonds, power of attorney is a really popular one right now. Commercial lines certificates of insurance verification, which Andrew can talk about because Andrew is participating in that one. Life and annuity mortality monitor data sharing, which is really cool. And first notice loss data sharing. That's our most mature use case, and we're really excited about where that one's going. I think a couple areas where that's starting to expand is looking at not just the front end of the claims process, first notice loss, but also the back end, looking at subrogation, looking at total loss scenarios and title transfer. So there's a lot of opportunity there.
Wow.
And this is the certificates of insurance draft process flow. And Andrew was part of a working group that was working specifically on COI with a vendor called TrustLayer, who has an interesting platform solution using robotic process automation. And we were trying to articulate a scenario, and Andrew, please fill in some of the details here, but working on a scenario where a certificate requester could verify the validity of coverage, making sure that that coverage on the paper COI was actually active, and making sure that those limits and coverages were at the limits that they needed to be for the work that they were applying for. But Andrew, I don't know if you'd like to talk to this at all.
Yeah.
Yeah, absolutely. So, and I'll mention that. So as Brendan mentioned, both of the Brendan mentioned both of the surety power of attorney and the COI POCs we've been a part of. I would say a lot of our blockchain initiatives have been through RiskStream, so it's been a pretty solid partnership there. So on this specifically, so what I'll do is I'll briefly talk about it, but then I can also relate it to the independent agents and brokers and how they could actually very easily fit in on a process like this. When we think about certificates of insurance, and it's such a static, like one-off piece of paper that at that moment in time, when your insured was asking for a cert from a vendor or a subcontractor, or they were providing it to someone that they were doing work for, at that moment in time, that information is likely to be true. What happens the next day, the day after that? What happens if there are changes in coverage that your vendor who gave you a cert had? You really wouldn't know about it. And unfortunately, what tends to happen is you might not know until there's a claim and your insured is in a drop-down position because the vendor that gave them a cert, it turns out 3 months later, the information was no longer valid. So the thought here is that what if we set something up so that it's very transparent? You could effectively do almost real-time verification of the information that the cert is still valid. And you can set it up so, going back to that single source of truth, you could see on the blockchain when something may have changed, when someone asked for something in the first place. It really has that area that you can look at it and say, okay, yes, on this date, this was asked for, on this date, it changed. We then took that information, we were able to then resatisfy the requirement because the agent or broker went out and was able to get the coverage that was needed once something was deemed no longer verified. So when you look at the different process that goes like 0 to 7, effectively, an agent or broker can really insert themselves in this process almost anywhere. And they may not even need to really truly have a node or any type of information. They just really need to understand that with a company like TrustLayer or a different insurtech company, here's how the process works. Here's how information is verified. Going back to Brendan's point of what's public versus not in terms of information, some information that the process deems to be okay to be public is public. Other information that we want to keep private is private, and it's not on the chain. So you have a almost collaboration between things that are on chain and very, very public, and things that can be done off chain, maybe through an API, which I think was another topic of these sessions, that could be done separately and effectively in private. So what something like this does is it sets up a system that is effectively working, because you can see it working. You could see that transparency. If something isn't happening, you have multiple sets of eyes that are on it. So something like this really hits in that pain point of what happens if a vendor's cert is no longer valid. How can you act on it quickly? What happens if there was maybe a change in coverage that you didn't anticipate, or there was a new exclusion added or something to that effect? We can effectively make this information as public or as private as we like, but having that single source of truth that someone can look at and say, yes, this was requested. Yes, there was a change. Yes, someone then took action. They fixed it, and now we're back on track and everything's fine. So it's huge, and we think it was a great POC, and we like where it's going, because it certainly satisfies a pain point. I do want to mention, we do have areas that we're working on outside of RiskStream. We've been involved in the B3I, which is another insurance consortium focused on DLT. It's generally focused on the reinsurance space. So there's not much I want to add here. When it comes to what we're doing with RiskStream, it's very specifically thinking about how might DLT help solve some of these pain points that we know exist with our insureds, with our agents and brokers, with our wholesalers, if that's the case, and at the end of the day, with our clients. So it's been, so this is, I think, a great example of something that we've been working on in collaboration with others. And it helps to prove that really, in order for DLT and blockchain to work, you have to have that collaboration. You have to have multiple parties come together and understand that, hey, we're all going to benefit from this level of transparency. We're all going to benefit from a level of knowing and having that single source of truth.
And I agree, Andrew. I think this is a great POC. I think it enables everyone to get on the same page, which is really what we want with pretty much everything we do. But it's a great case study. So you've both talked a little bit about the trust and how it's the flow of blockchain is separate from any kind of nefarious meddling, changing of records. But let's talk about a little bit more about the privacy and security on that at this point. I'm thinking that some on this session, those attendees, may have concerns and don't fully appreciate the security aspects around blockchain. So can you share a little bit more deeply on your thoughts on this from both of your lenses? Andrew, do you want to take it first?
Sure, and I think I can probably relate it back to what we're doing with the COI. So first thing is when it comes to privacy. So I mentioned that there are, like when you think about a certificate of insurance, you think about insured name and address. You think about policy numbers. You think about effective dates. You think about limits of insurance. And when I talk about what's on-chain versus off-chain with something like that, what I want folks to understand, and Brenda can certainly speak more to this later, but that what we put on-chain is not necessarily that personally identifiable information. What we may put on there is the question of, in accordance to what's going on off-chain, let's ask questions. Is the limits correct? Did they ask for information? Is the policy number correct? And it's almost like more of like yes or no questions that you're seeing on chain. And you have that transparency that yes, someone asked this question and the result was Y. So like I said, it's like there are ways that you can incorporate DLT with other technology like APIs, as I mentioned, where the API is where the private information stays. The blockchain is where that public information shows, and and it's more a case of hey, we're just proving out that this information was transparent. We're proving out that this was asked for, that it was thumbs up, it was thumbs down, etc. Going back to the security aspect, and I'm glad that you brought up cyber ransomware in the past. Once again, when we think about these blockchain systems, as they grow, they get even harder and harder to hack into. I wouldn't say it's impossible, but it's very close to impossible, because what you're effectively doing is, as the blockchain grows, all of that information, or really most of it, is still there. So if you were to hack into certain blockchains, you would have to effectively recreate all of that information.
Right.
And I think a good example is as people talk about Bitcoin mining, which is effectively the act of creating more Bitcoin and having this information and proving that your computer can do it. 10 years ago, your laptop could do it, because there wasn't a lot of that stuff in the past that happened. Now, if you wanted your laptop to try to mine a cryptocurrency, it would likely catch on fire. The reason why I'm saying that is because that actually highlights how secure these systems are, where it's like you have to effectively recreate all of these transactions that happened in the past, and it just keeps growing and growing and growing and growing. So when you think about the security aspect of something like this hackable, it goes back to this type of system is hackable in the same way that a criminal is likely to try to gain information. It's through social engineering. It's making you think that there's someone else, and it has very little to do with blockchain or distributed ledger technology. It has more to do with, oh, I thought that was my boss asking for my private keys. I thought that was my coworker asking me to send this over the blockchain. It turns out it was a criminal. They made it look like it was that. So it's something where I think if you're an independent agent and broker, I think what's more important for you is to have that better understanding of social engineering, of how someone could try to almost like fake their way in, and then how that could impact your tech. It's less about how hackable is this tech and more about, well, how vulnerable is my client or even myself as an agent and broker to someone coming in and making it seem like it's actually someone else, but it's actually a criminal.
It's interesting how that's been coming up in every session throughout this tech summit. What we're getting whenever we broach the subject of security, it does come back to a lot of the social engineering aspects. So thank you for that, Andrew. Brendan, anything to add on that?
Yeah, I think Andrew hit the nail on the head there. I think the only thing I would add in terms of RiskStream's ledger, what's the privacy of that look like, right? Well, it is a private ledger, so as mentioned, the players are known. There is, when you think about blockchain solutions, blockchains themselves are inherently immutable. They're kind of very, very difficult to edit. If you think about millions of computers that all have the same transactions on them, you go in and try and edit one, it's not going to happen. However, if you do control 51% of those computers, then you might have a chance at editing the history there. But it's incredibly impossible to do. So RiskStream, our platform is SOC 2 and ISO certified. So from a security standpoint, we have the level of security that our members require, our stakeholders require. And that just means if we were to get audited, we would pass with flying colors. So we're really proud of that. Other than that, it's a very secure way to transfer data. All PII data for all RiskStream solutions are kept off chain, to Andrew's point. There's always pointers in the solution that lead to binary yes, no, 0, 1s in order to verify information. So it's as secure as it gets. And the only weakness is, to Andrew's point, the social engineering, the people point of weakness, right? So it lies there.
Great, thanks. So as we wrap here, what I'd like to pose to each of you is, what potential future applications are exciting to you when it comes to blockchain? Andrew, I'll start with you.
Sure. So there are quite a bit. And I generally like the way that blockchain and DLT increases accountability and transparency in what we do. And I think that regardless of what functions it could serve. So when I think about different areas that we are currently exploring and can explore, You think about claim information. You could think about the act of subrogation, loss exposure data. You think about potential payment reconciliation. So even getting away from the actual like being insurance underwriting perspective, which I would have, sending money overseas. Like it's almost whatever possibility that you can put on the blockchain. The fact that it helps eliminate information asymmetry, I think is extremely important. And I feel that, especially when it comes to the insurance industry, no one should really have like a leg up on a situation based on information asymmetry. Be it, someone's hiding some information or someone's, not being completely forthcoming. When I think about what it can unlock, and let's maybe just take, loss exposures, for example, or just historical exposures. From the perspective of, if you're an independent agent, and you're submitting a submission to a carrier, you want to ensure that that carrier is getting the same level of information. If another agent or broker comes in and sends that same underwriter a different set of information, that maybe makes that account look a lot better. You don't want to be in a position where you don't have people don't have the same information, and it's almost like, well, hey, that other broker's lying to you. That other broker, they hid the exposures from 07 and 08, and I gave it to you. I was transparent with it. So it's one of these things where it's like, if you can have a situation where you can eliminate that information asymmetry, it puts everyone on the same level. And I think that really benefits independent agents and brokers, because they would have the same bit of information as everyone. So everyone has the same information. Everyone's being very transparent. And I think that is extremely important. The other thing I want to highlight when I just think about things that are exciting is that when you just look at the InsurTech community, as well as even just some non-insurance specific tech that are using DLT and digital ledger technology and blockchain for a variety of purposes that we've discussed, I see a lot of potential there. And I think that this community should look to embrace that tech, especially if they can embrace it in a low touch way. Because a lot of what's happening is that an InsurTech might come in and say, hey, here's a service that we can offer you and or your client. You don't have to do anything crazy. It's more of just, be willing to share this level of information or be willing to collaborate with some other folks. And I think it's important to understand how that tech works. So you can look at that and say, yes, I like it. Here's what it does. Or I don't like it because I think this puts me in a bad spot or puts my insurance in a bad spot. But regardless, to have that understanding of how the tech works, I think you're likely to see that there's going to be a wide variety of different solutions that are out there, and products and services that are aimed at this community at large, as well as your insureds. So I think as the tech matures, there's going to be a lot more out there. And I think it's a tech that should be embraced.
Great. Wow, that was a lot. Thank you, Andrew. So Brendan, you get to wrap it with us, talking about what excites you from a future standpoint.
Yeah, I think I really always had an interest in the car and what an automobile was capable of. It's really, these days a computer on wheels, right? So there's a lot of IoT implications there. So, what if windshield, for instance, windshield cracks or breaks or damage are the largest volume areas for auto. And so if you could have a car that could kind of self-detect when a windshield has been compromised and then kick off a claim, where you get home and then an hour later a repairman shows up and replaces your windshield or something along those lines would be really cool. Also, about 4 years ago, I put together a concept for total loss, where the car is, being able to communicate digitally. It rolls off the assembly line. It's got its birth certificate that is on the ledger. And then, the car's history could be tracked based upon that. Where it's got its initial wallet, right, and all the future transactions, accidents, any sort of repairs, all that information, kind of like Carfax.
I was just thinking about that. Yeah.
Yeah, but like in a digital way where it's not just Carfax, it's anybody who needs to have that information understood about the car, and that could be, you know, your current insurer or future insurer, or maybe it's even the manufacturer because there's a recall, right? They can trace your ownership back to that specific car and say, hey, your airbag's faulty, come in and get it fixed. So there's a lot of potential there. And then if, you know, if the car has this birth certificate, this digital birth certificate, in the event of a total loss, a real pain point is transferring that title from the insured to the insurer to the salvage company. And it takes a long time. It takes weeks.
Right.
And you got to get signatures. So if there's a digital title that can be transferred instantly, you get rid of all that. So I think there are some areas out there that there are some companies out there that are starting to look at that. And in fact, RiskStream is actually starting to talk really seriously with a particular vendor who's looking at doing some stuff with digital titles and total loss. So that's a really exciting area for us.
Wow, I was thinking while you were talking about that, because we didn't prep talking about this specifically, but yeah, that would get rid of Carfax unless they were the innovator, and the digital title. Think of what that would save from a consumer standpoint, from a governmental standpoint, with lines at the license bureau. There's just so many innovations and improvements that would bring to the fore. That's a great possible case. So what I'm going to do is, Brendan, I'm going to share your contact information. I know that you, kind of like Ginny and I, you're not the lone wolf at RiskStream, but you wear a lot of hats. So you're comfortable with being the point of contact, correct?
Please, yeah. If you have any questions about RiskStream, the consortium, getting involved, and participating in any of the solutions that are underway, just shoot me an email, let me know. Happy to give you a 30-minute walkthrough or overview of the consortium and what we're working on, and you know, entertain any questions that you have. We'd love to have you. And actually, I should mention that the agents have a specific and special pricing available for membership. It's $10,000 per year to be a member of the consortium.
Great. Well, at this point, Andrew, Brendan, thank you so much for some great detailed information. We covered a lot of territory, and I think it'll, if the attendees are like me, it's bringing up a lot more questions. So what we're going to do now is flip to the Q&A section of this presentation using your attendee questions from the Q&A function on your Zoom screen. So let's do that now. Okay, here we go. Brendan and Andrew, we've got a few practical and some higher level questions that I'd like to pass your way. One, you'll be able to tell this one is from an agent. What is the likelihood that a carrier will create the original disclosure of coverage document and get the agent out of these crazy requests for coverage interpretation language on certificates? Current request for extra wording is, in this agent's opinion, out of control in certain industries. Andrew, do you want to try that? Try responding to that one?
Yeah, that's an interesting one. So, I mean,
it is.
First of all, I actually think that, you know, Brendan and I can take some notes in terms of use cases that we can look at moving forward. I mean, one thought here is that I think a good way to look at this is, what is the role of the blockchain when it comes to this request specifically? So my thought here is that, could you use blockchain to document that it was asked for, and that, so I assume this is arising out of a claim. I think this is like, you know, a 30-day notice where you have 30 days to issue this disclosure. So the thought there is, like, could you have a situation where the blockchain actually is able to track who asked for it, when they asked for it, when it was provided, but you use an API or something off chain to actually send that information along. So I do wonder if you could use it in conjunction with other technology to achieve that. In terms of that, the additional request for coverage interpretation, I'd have to dig in that a little more, but I think overall the thought here is that you have to look at, what's the use for this specific way? What's the use of something being transparent? What do you want transparent versus what should maybe be more off chain behind the scenes? And I think you can likely probably use a combination of the two to make that work.
Okay. Brendan, you want to weigh in on that, or?
That is way outside my wheelhouse. So I will.
Okay,
defer to Andrew on
cool.
that.
So how about this one? You may have been posed this high-level question before. What about bugs? The Ethereum blockchain had a big bug last August that split into two separate chains. You probably have heard about that, but from your standpoint, the inherent bugs, minimal, is it a concern?
Is that for me?
Yes,
Yeah,
please.
yeah. I guess
Sorry.
it depends. So when you're talking about Ethereum, you're talking about public blockchain, and all tech has bugs, right? So, when you look at this question through the lens of RiskStream, again, we have that private blockchain, and we use different chains based upon what the demands are of the solution that we're trying to put forward.
Right.
And the blockchains and the protocols that we use, so far, they're safe and they work. And again, it's a private network. So even if there was a bug, we wouldn't think there would be, difficulty in reversing any errors or any problems with, information leakage or anything like that. So I would think the risk is pretty minimal on the private networks. On the public networks, I mean, there's always going to be bugs, and there's always going to be a dev team to hopefully fix those bugs.
Great answer. Thank you. Here's another one from an agent. Will blockchain bring about that ideal world where underwriters no longer ask factual questions to agents like the square footage of a building, protection class, sprinkler, whether it's sprinklered or not, number of stories, based on the volume of vast information that is out there, public and private? Is there any hope for that sooner versus later?
Yeah, I mean, if I can answer this one, just given my underwriting background, I think that we're already on our way to that ideal world. I think regardless of blockchain or not, I do think blockchain can help. I think a lot of what we see is, I think we're always looking to use publicly available information. How do we incorporate that into our models, rather than going back to the agent, I guess, as to Mark's question here, continuously going back to an agent and asking questions that everyone actually already knows the answer to. So I think we're getting there. It's a mix of using publicly available data, third-party data, API feeds, potential transparency through a blockchain. So I think it will only help. But I think probably a bigger challenge there is what information is truly in the public domain, and what do you want to keep transparent? Because maybe there are things that you'd rather say, hey, this is something that, give us a request, request it through the blockchain, we'll send it through an API or something to that effect, where maybe it can help speed up the process and make it a little more efficient, but it might not be able to satisfy everything through a blockchain.
Got it. Thanks for that response. So we got time for one more question. I think, Brendan, I'll toss this over to you. This is from an agent that I know and respect. Is there a blue sky list of, and so it sounds like blue sky meaning desired list of insurance-related transactions that would be well suited to be handled within blockchain? And this agent says, it sounds like an ACT working group to me, though I think that's kind of in your wheelhouse, Brendan, to be envisioning what the best list, the low-hanging fruit to on up to what insurance transactions would be well suited to be handled with blockchain. Have you had that conversation already, Brendan?
Certainly. We have hundreds and hundreds of use case ideas in the backlog. And one of the conclusions that we came to is that you need two things. You need a high volume of transactions, and you need more than one party involved in the transaction. And if you have those two things, then that's a great opportunity for a use case. If you think about some of the areas in insurance that have really high volume transactions, auto claims in particular are very high volume, especially windshields, right? You get a windshield crack, and that's their very low complexity type claim. It's very high volume, and it's a great opportunity to use blockchain, as well as integrating, maybe TPAs like a Safe Light or something like that into that equation. So yeah, really just, if you need a filter, high volume transactions and the number of parties involved in transaction, and you can kind of go from there.
Thanks for that, Brendan. And Ginny and I know, having been involved with RiskStream for a while now, the discussion that's been going on with with taking a look at the different types of transactions, where the value are, the volume of them. So I'd definitely advocate for anyone that's more interested to reach out to Brendan with the email address that we shared earlier. We'll also have this entire session, including the Q&A, recorded and posted after our Tech Summit ends, probably at the beginning of next week. And at this point, I'd like to say, Brendan and Andrew, thank you so much for a really great and interesting conversation. Thanks for your insights, guys.
Thank you, Ron. We appreciate it.
Yeah, thank you so much.
All right. For those attending, we've got another couple sessions coming up right after this. At the top of this hour is the agency and industry best practices and code of ethics. So we hope that you jump back to the virtual platform that we have and join us in the next section. So thank you, everybody. Talk to you soon.